All right, everybody. Good morning. Happy Friday. The end of a not so exciting week where things really didn't go too far. We have kind of the NASDAQ went one way, S&P's pulled back, Dow pulled back. We'll take a look at them all. But, we got markets going in different directions, and overall, neither of those directions of anything of any significance. So, with all the news, the climactic event as we come into this week, and we'll show you what happens. It really, as far as the market goes, it was kind of like a yawn, and we'll see today as the day unfolds whether it gets some direction or the other. But based on where the S&Ps are, looks like, hey, it's either one of two things is going to happen here, the way it usually plays out historically as far as patterns go. It's either going to turn around and it's going to rally back up to the highs and make new all-time highs, as we're looking at the S&P here, the futures, or it's going to make what I call a measured move lower. And measured move lower is just what it sounds like. You have the beginning of one move, which is, and this was a grinder kind of a move, because in reality, it was only the 2 days here, which actually start at the top of this green bar, which was a breakout, and breakouts by definition, where this pulled back, and then it actually got the attempt to go lower. So you've got what I call a 180 reversal here, which is a 2-bar reversal. And this one was just beautiful because it broke the low of the red bar and then reversed back up to form a bottoming tail bar. And that's a fantastic setup, because this, when you buy breakouts, which what you don't want to do is, because you want to be buying here, right? You buy pullbacks to support. You don't buy breakouts above resistance after it just rallied more than 100%. That's, well, it's close to being stupid, but it's moronic if you have a tight stop. And if you put a stop down here and share size it accordingly with a plan to add to the position, at least that's an intelligent plan. But many go back here. Is it a money bar? Yeah, it's a variation of a money bar, Frank, but absolutely that definitely has the parts of it. One of them, meaning this one happens at resistance, but it's 100% retracement as is defined in the MTS class, yes. And the other one, as defined in the MTS class, is one in which it really comes up to, say like a 50 MA or a 200 MA, and there's nothing to the left there. So it's really just stalling because of the subjective reference point. Could be a fib line, whatever, meaning it's not price. So when it stalls there, it's really just stalling in the middle of nowhere, and it's had a strong move, and then you get that reversal. But, as we look at patterns, realize, and I'm sure you do, but let's clear this up for a second. When you look at price patterns, like you have a starting point. So I show you that pattern right there, which really focused on this, in the context of that. So when you look at patterns and you see, hey, here's this wonderful, beautiful type of pattern, and you look for it, hey, let me find the same thing. Common sense, find the same thing, make money. Well, the market is such that it doesn't always produce exactly the same thing. So if you understand the concept, well, then it can form in different ways, but we all like to see perfection. And so this was what I would call a perfection entry point. It didn't result in a perfection move, meaning that, in a continuation. And that's why this week has kind of been a yawn kind of thing, because, well, the breakout didn't necessarily fail. It's just not doing what a perfect breakout does under this scenario. And now it's pulled back actually below the low of the breakout bar, the big green bar. And one of our general guidelines is that, as you know, wide range bars, a retracement should hold the 50% level. And while that's not necessarily any real support point, if we were to look at it from an intraday point of view to see if there was some consolidation there. It gives kind of a common sense reference point. And now this is retraced more than 100%. It's actually under the low of the wide range breakout bar. So unless today, which this is today, pre-market, that red bar is live right now. It's because it's the futures. That either turns into a green bar by the end of the day, and then, or maybe it could even a big green bar, they can get back up to the prior day's high. And then that would suggest, and we'd have a setup, not the greatest setup because of the pullback, but that would suggest a move up to new highs next week. Now, if it closes red and even below there, well, then that sets up the pattern of a measured move lower, which would say, hey, these S&Ps are going down to this major support level, which, we're getting ahead of ourselves. But by the end of next week, if we were down there, you're going to have a failure with a big retracement, which, it wouldn't be week to week because that would encompass more of that, but you'd have a bearish pattern, whether, it's, an up bar, a stall, and then a down bar. And this is why candlestick names and looking at patterns like that is like half the information. And when you connect names to it, it's actually like it creates these beliefs in your mind about certain patterns, these pictures, versus the way we teach it and use it is that it's really about understanding retracements. So regardless whether it formed this way or whether it just went up and down, or it went up and a couple of bars like that and down, right? All of these are about retracements. So if this went up and if it goes back down there, it's not going to look good on a higher time frame or this time frame. So little education insights about patterns here in candlesticks and how to look at them from a clearer point of view per se. So here we are. You can see the 60-minute down near the lows. Buyers are beginning to step up here. And let's see what they have. Let's see what they got behind them here. Maybe this news with this Supreme Court thing, has people on edge as to, whether it happens or not. And does that affect the markets one way or another significantly? No, not at all. Not in my personal opinion, but not in a big picture point of view. Does it affect it with traders' attention being, taken up and maybe a lack of commitment in the moment? Sure. I mean, I think most of us were more interested in what was going on the TV yesterday versus movements in the market. I mean, I kind of was because the markets weren't doing very much anyway. Alex, I think, a percentage retracement as to if we say, hey, here's a pivot low and here's a pivot high, just spitballing it. It's the same thing as saying here's a wide range bar and 50% is okay, which is a normal kind of pullback that doesn't really damage the whole move. And so, I mean, that's just a starting point. And then, of course, you have to look at the patterns and that occur. So if we look at this move here and say that this move is a whole move and how much of a retracement would be acceptable, well, we could still start with a 50%, but this went sideways. And bullish sideways action at resistance is much more bullish than any retracement. And that's just common sense. So I guess 50% is a good starting point. And then you look at the pattern and, look at exactly how it forms. And I think that's one of the big stumbling blocks in traders or investors' success, in that they come to other educators or read books and they say, this is the pattern, versus being taught, okay, here's a starting point of a concept, whether it's a pattern or retracement. And now let's look at it in a common sense, logical way so that we're not defining ourselves or our method into this little box where so many become, confused in the analysis paralysis scenario because they put themselves there versus understanding things in a more abstract level within that perfection. Now let's look at the rest of the markets. This is not a seminar per se, but I like to share with you guys things that you can take away from this and make use of it for the rest of your trading days. So the cues here are up at resistance, and this is what we call a self-correcting uptrend, where it kind of keeps you second guessing, big red down bars. So there's a big retracement all the way back down. It's like, oh, gee, it started out well here, but now it's all the way back down. It looks like, okay, we're going to go down. Oh, hold on a minute. We retraced, almost 100% of the red bar and closed more than 50%. Maybe we're going to go down or sideways. No, we're going up. We're going up. No, here, stall there. No, we're going down. No, we're going up. So the market has been kind of erratic, self-correcting, almost laughable, unless you're the one getting your head smacked back and forth in, the tennis game here. And you're welcome, Jerry. I mean, that's what we do here at Master Trader. I mean, it's not about just, hey, buy this, sell that, do this option strategy. It's about empowering you, to do this on your own. And, I'll tell you, just to give myself, if I can, a little pat on the back. There's no one else in this business that has created more educators and people that have either worked for an education company or who went on their own what they've learned from myself over the years. So, if anyone needs, a validation as to what we offer here and how we help others and teach them beyond buy this, sell that, just go to the website. And people watching here on YouTube, just go to the website and look at the list of individuals out there that are doing this for a business, teaching others or on their own, and you might be amazed at the names. Okay, so up at resistance, there's going to be sellers. They're pulling back here a little bit. Ideally, tell you the truth, well, from a neutral point of view, this goes sideways, and we see it already backed off from the resistance. It went back up. So far, we've got an inside day. Maybe today's going to go out with an inside day. We really don't know, how things end in the the end of the day from the morning, but we look at patterns, and maybe this turns into a 1, 2, 3 continuation higher, which flies in the face of the measured move lower in the S&P. So, the theme this whole week has been one in which I've talked about chop, uncertainty. There's nothing here to suggest that we're going to get a meaningful move, right now. And I'm not always right, but it's exactly what happened this week. And the Dow, which led the way up, pulling back, let's say 50%, that's okay. Is there any support to the left there? That's where it pulled back to? Not really. So what does it need to do? It's what I call creating support. This has got to become a W bottom here, which means a green day today to get this pullback turned around. If we go out with a red day, well, now we're coming back to the theory of a measured move lower. And they often end up, these measured moves lower, at an area of support. So if it's to the downside, major support. If it was in a downtrend, it ends up at major resistance. So that's our guide for today. What does this bar turn out to be, since we don't really have anything of significance, of what I call an event, to trade off of from yesterday? If this day goes out green, look higher next week. If it goes out red, look lower next week. So we've got, that to see how it actually plays out. And bonds are holding here a little bit, bouncing off of where they retested these bottoming tail bars. We'll see how far they get. And the disconnect of, if you don't know, as bond prices go down, interest rates go up. But the disconnect between, a positive for banks, interest rates going up, and the yield curve, expanding. Why is that positive for banks? Because the difference between short-term interest rates and long-term interest rates is basically free money to them. Right? So it's not helping here. So something is going on. These regional banks, especially, which are getting pounded, we're bottoming out here. And then they look like they're breaking lower. They pop back up. Now it's going back down again. And you can see it's down here pre-market. And the financials, I can find the ETF, which I should be able to, right? I look at this list every day. It broke out and more than 100% back down again. So really, Mr. Schizo market that we've been talking about for a long time. And anyway, semis, a lot of semiconductors look terrible. And this index of the ETF of the semis really don't point out to how some of the semiconductors within that index are getting pounded here. And oil, which looks great. There is bullish price action. Right? There's your pullback, blast up, messy stuff going on here. But it hold the bodies, the closes close close to 50%, back up again. And now it's going sideways versus pulling back. So this is suggestive that it can go higher. We shall see. A lot of these, oil stocks have done pretty good, but they're up at resistance. Some of them backed off yesterday, but there's took note this morning of some oil-related stocks, especially some low-price ones that seem to be getting some attention. You might want to keep an eye on this one from the past, which I thought, some time ago might be headed towards zero because it was really crushed. As you can see, some reverse splits there, but it's coming back. So the price of oil is helping some of these companies here. And I won't go through them all, but like this one here, Safe Bulkers, had a big day yesterday. It's a low price stock. It's in a downtrend, but wide range buy like that certainly says that buyers are stepping up on some of these dogs. Gold, that's another dog. It's holding so far, just chopping around, but it couldn't get too far. After that little climactic move lower. And that's it for me. I'll let Dan go through it. I went on a little longer with the little education there, but all yours, Dan. See what our open things are doing here.
All right, great. Yeah, no, always fantastic. Yeah, I mean, you mentioned oil helping these. These are, shippers, obviously, big old shipping container ships. And yeah, we tried going core long some of these. Look at this weekly. But yeah, we'll keep an eye on them. Let's see, CGC marijuana stock was coming in yesterday, relative weakness. Our short put is 46. I don't like the retracement, but there's nothing we can do on it now. TTD, I'm showing some small gap down, but we have a far out of the money put spread. Charlie Papa put spread. We have open profit on that. Yeah, that XLF, I was looking at that too. Jeez, that's very strange. Cisco, we've moved the stop. Oh, that might have stopped out into the close. If so, it's at a profit. I'll check it later. Vico here, we're short stock. PDD out of money put spread. CRM, I canceled it. It's still on my watch list though. M-chip, a weak semi. That's breaking down again. I came so close to hitting that yesterday, right on this breakdown. So that still looks lower. Alex's IBKR looks lower. We have a covered put in Dollar Tree that should get taken away today. We also have a covered put in Macy's, which we will roll to next week because we shorted the out of the money $34 puts. See, so that strategy worked. I think we got 26 cents. So that 26 cents is 100% profit. You know, we're still short the stock, so we still have a bearish position, but that's why we leg into those covered puts, covered calls. Apple